President Trump says he has chosen Council of Economic Advisors Chairman Stephen Miran to serve as a Federal Reserve Governor. Meanwhile, Bloomberg has learned that Fed Governor Christopher Waller is emerging as a top candidate to succeed Jay Powell as the central bank's chair. Joining us now is Ozan Azkaral, managing partner of Tanto Capital Partners. Ozan, good to chat to you. Well, I don't think it's a surprise that President Trump is moving to put in these more dovish voices on the Fed, either for the replacement for Adriana Kugler on a temporary basis or the eventual replacement or successor to the Fed Chair Jerome Powell. But I think what may be alarming to investors is, in the case of Stephen Miran, he was one of the main architects of Trump's tariff policy. He was one of the minds behind the Mar-a-Lago Accord, calling for a systematically weaker USD. What knock-on effects is this going to have for investors looking at the U.S. market?
Good morning, Jumana. I think it's fair to start with a broader comment saying that we are in a moment of profound recalibration around the markets. The traditional playbook that we used to play with no longer applies. This is very much a world of multi-speed economies and multi-dimensional risks, including risks of monetary and fiscal policy within the U.S. So investors, I think, are getting used to the notion that the old playbook is out and the new one is in. And what, of course, this could mean for investors is that we're going to witness Fed acting in a more, I guess, pronounced manner. But that's not really a shock. I think what we really will understand or wait to understand is when the markets are going to really focus or start focusing on the real risks behind all of this, which really is not within the financial markets, to be honest with you, because the financial markets seem to have become more or less comfortable in pricing in the volatility coming from the Trump administration. But corporate boards, especially for manufacturers looking to invest, the delaying of the investments, the delaying of the capex is going to be the one area that I think we're going to have to discuss much more often and in detail going forward.
Yeah. Do you think there are going to be questions about institutional governance, perhaps, in the U.S., and the fact that a week ago we had this weak jobs report? Trump then moved to fire the BLS commissioner. What implications does that have really on the sanctity of the data collection that's taking place in the U.S.?
I think that's a great question. And I think we'll have to wait a little longer to understand whether this was just a one-off or whether this signals a more profound shift towards a different way of the sanctity of data management. Obviously the headline doesn't look so great, but one thing doesn't really make a systematic change. Ultimately, we are still talking about U.S. markets where the systems and checks and balances, relatively speaking, are still one of the world's top kind of systems, if you will, right? So I wouldn't really read too much into it at the moment, but of course we'll have to watch this more closely.
I want to bring it back to something you said about capex spending. This has been a really interesting earnings season for some of the big tech companies because they've come out with these huge numbers of capex spends to help build out their AI infrastructure business. And I wonder whether at some point investors are going to start questioning when the point of monetization is actually going to arrive, because the numbers are huge. And even this morning, you have the likes of Meta bringing on Blue Owl and PIMCO to help fund some of those AI aspirations. Is that something you're watching out for as well in the coming year?
I mean, look, I am watching out for this, although I am less worried about the capex spending in AI, because the reality is that our life is changing so fast, and AI is going to become, and is already, a fundamental part of how we're going to live, how we're going to conduct our businesses, our lives. So it's not as if this capex spending is being done for a project that may become credible in the future. It is very much real, and this will very much dictate the future of humanity. But I have to say this, in looking at the markets overall, the next 12 months won't really be defined by forecasts as much as they'll be defined by adaptability. And for investors and for policymakers and for firms alike, looking at resilience doesn't necessarily have to come from conviction per se, but from agility. So I think we're going to have to look at much more closely at what all of this change really means for the feasibility of the business models across sectors in this brave new world, Jumana.
Ozan, thank you so much. Ozan Azkaral, managing